What's going on, YouTube family? Welcome to Automotive Life. My name is Lucky, and today we're going to be talking about why the Fed does not care about the auto loan crisis. If you're new to my channel, we talk all things automotive on this channel, not only from an automotive expert's opinion and side, but also as a consumer side. So hopefully both parties can see exactly what's going on in the market and hopefully meet somewhere in the middle. Now, I love to get people's opinions, comments, and everything else. That's the main purpose of this channel, is to be transparent and help share information. So if you have an opinion that's different from mine, that's okay. We could still be friends, but please let in the comment section below. Now let's go ahead and get into the video. So the reason why I decided to make this video is over the last 2 weeks, my channel has literally exploded. I got featured on multiple news outlets. The Barron's article that we did literally exploded. It was all over the news. People were picking up left and right. We were featured on Wall Street Bets, Forbes, CNN, CSNBC, Fox News, and multiple podcasts. I've been doing podcasts literally since I started that video. Also, a lot of my YouTube friends decided to pick up the videos and start making videos of their own, so this way they can help educate their viewers. Now, the one thing that I do is I always read my comments just to see what's going on in the market and let people know, because like I said, I want to be transparent on this channel and also share information. And one thing that shocked me was, out of all these different people that are not in the automotive industry, everybody was like, oh, well, the market's bad. Even if it gets really bad, don't worry about it. The Fed's going to bail us out. So today I want to talk about why the Fed does not even care about the automotive loan crisis and why they are not going to bail us out. Now, one of the first reasons why is because cars are depreciating assets. The government has no problem giving you a federally backed mortgage loan, because if they got to take it back and get it, they're going to get their money. They're going to be able to get appreciation on the house. If it's going to take them some time, they don't care. They'll be able to get majority of their money back. Plus, it's a lot harder to just move a house and take off with it. But with a vehicle, like I said, a depreciating asset, the government doesn't want any part of that. That's why if you go to a bank, if you have bad credit, you're a first-time buyer, there's no federally backed automotive loans. Now, you can get an SBA loan to get like equipment and cars for your business, but that's a completely other thing. But as far as regular consumers go, there's nothing like that, and there's good reason why. And another reason is automotive debt is at an all-time high at $1.8 trillion, which is insane. But in the scheme of things to the Fed, that is extremely minuscule when it comes to the overall portfolio. Now, housing loans make up majority of America's debt. Now, like I said, they don't care about their $1.8 trillion in automotive paper. They don't think anything about it. But the reason why it's so important for people like you, people like me, and also business owners is because automotive paper is one of those things that a lot of banks depend on to get interest, to gauge the market. And this is why I'm really harping on this, because as these loans start to default, you're going to see, especially if you're in a small town or if you bank at a local credit union, these banks are going to be affected the most. Once they start losing $10,000, $20,000, $30,000 per car, they have to tighten up their lending to cover those losses. And sometimes if they have too many losses, they can't lend anymore. Now, how is that going to affect you? Well, first thing, it's going to get harder to get a car. It's going to get harder to get a credit card. Let's say you want to open up a business during the downturn. Most people decide to open up businesses when we're in an economic recession, because that's when most millionaires are made. That's when there's most opportunity in the market. So some people will dive in at the bottom of the market. But if they're really tight on lending and they don't give you any maybe business loans, business credits, maybe SBA loans are a little bit tougher to qualify for, this has major ramifications across the lending board. And that's why I'm so big on this, because I remember back in 2008, 9, and 10, going out to get like auto loans, trying to help people get cars. I mean, it was an utter nightmare. Unless you were only financing like 60, 70% of the vehicle's value, which is LTV, they would not even touch it. And this is during the time where people didn't have a lot of credit. They didn't have a lot of money. So, people were trying to rebuild their credit, get back into a good financial situation, and there was no products and nothing to help them. And that's why I am so scared of what's going to happen when these things start to fall. Now, the good news is a lot of people took my story and ran with it. And now it's starting to be like a well-known thing, like people are talking about it. And that is a good thing, because now they can't lie and be like, oh, the car business, it's okay, everything is fine. I have franchise dealers shaking in their boots, because the average days on lot, which is, it lets us dealers know how long our inventory is sitting on a lot, is increasing every single week. And the reason why is because people don't have the money to qualify for loans. they can't sell these cars because they bought them for overpriced. So now they bought these cars at auction for way too much money. They reconned them, which means repairs. They put way too much money into them. And now they want way over their value. So if the car is worth 40, they're trying to get 46, 47,000. But we talked in a few of our other videos about LTV, which is loan to value. The banks are not doing that 140, 150, 160% LTV anymore unless you have immaculate credit and you're putting a decent down payment. So a lot of these banks are going to get scared, especially since we started going public with this information, because remember, a lot of this stuff is very hard to show. You can check the credit bureaus. We have some links if you watch the other videos that we did. There's tons of stuff out there where you can see that delinquency rates are rising, but nothing alarming. But remember, a lot of the auto loans that are defaulting are subprime, and a lot of the subprime paper is held by not only private individuals like myself, but there's also hedge funds. There's other companies that just literally do loan originations and sell them off to other people. So regular people that own this paper are not reporting to the FDIC about late payments. So whatever those numbers are, I believe it's another 3 to 5% higher because these particular defaults are not showing on documentation. Now, the reason why I wanted to do this Fed video is because everybody has this big belief like the Fed's going to come to the rescue and like somehow bail out the automotive industry. If anything's going to happen to the automotive industry, it's going to be more regulations. The Fair Credit Act was something that they brought up to kind of cancel predatory lending, selling people's information. There was some good, but there's also a lot of bad stuff when it comes to dealers. You know, if you have really bad credit and you have multiple repos, and I try to sell you a car at 24% interest, now I don't like to give people that type of interest, but people deserve the credit rating and the credit interest or the interest they get charged by themselves due to their payment history. So a lot of people that we normally got approved at higher interest rates to get them back in a car to help them build their credit, no longer we can do that. So we had a lot of customers coming in the last 2 years of business that were like, oh, I want to rebuild my credit. I got a repo when I was younger. I just got my car repoed, but I got a good job. I'm ready to get back on my feet. Sorry, I can't give you a loan. You have to give me like 30, 40% down, and then I can give you a loan still at 24% interest, but then I'm technically not doing a predatory loan. Now, that changed our market completely, made it extremely hard. If you ever heard that thing, like as long as you can breathe, we can get you a loan. Most times back in the day, if you had $1,000 in a pulse, I can roll you in a car. Nowadays, that stuff's completely gone. And especially if the Fed jumps in, like I said, they're not going to give us money. They're just going to add more regulation. So next thing you know, the people that are driving, like I've never seen so many people making $2,500 a month with $1,000 car payment. It's insane. And if they start regulating this stuff, they're going to put, just like houses, you can afford this payment and that is it. Just imagine that. Let's say you're a car guy. You love Mustangs. You want a GT convertible Mustang. Let's say it's like 50 grand. You've worked hard your whole life. You saved up a deposit. You got 10 grand and all of a sudden the bank tells you, you know what, you technically can afford it, but we don't want to give it to you because our parameter says you need to make X amount of dollars to make this car. And so once that happens, it's going to change the structure of loans. It's going to change the structure of pricing, how we can price vehicles, because a lot of these people will not be able to afford these nice cars. I have friends of mine that are literally making like $20 an hour that have a $120,000 Escalade. Now, these things is going to be just, like I said, the more regulation, every time you let the government step in, it's just going to make it worse for the whole industry. So if people don't take care of their loans and they start complaining and they want some sort of relief and they want the government to jump in, just remember, they're going to wipe all that stuff away, let everybody crumble, and then afterwards, they're going to put so much regulation and so much red tape that it's going to be extremely hard, not only as a dealer, but also as a consumer to buy and sell vehicles. Just imagine, you have to get pre-approved before you even get onto my lot, and then all the cars you want are not in your price bracket. So how homeowners and how home shoppers feel today with rising interest rates, and they can't get the home that they really want because they technically don't qualify for it, even though their rent is $2,500, but the mortgage company says they only afford $1,800. Get ready. That's what I believe is going to happen to the automotive industry. So if I were you guys, I would not pray about a Fed bailout. I would pray to God that they just let this cookie crumble, let the market fall on its face, and then we can build it back up from there, and hopefully people will get smarter. Now, from 2008 till now, I've seen a lot of people selling their nice cars right now. I mean, not even a few, like a lot, like a noticeable amount, where people are getting rid of their expensive cars and buying cheap cash cars because they see the recession coming. They learned in 2008. I'm even thinking of selling my Audi R8. I love it. I got over $100,000 of equity into the car, but at the same point, like if I sell it and 6 months later, I can buy the exact same car. Instead of $190K, I can pay $150, save $40,000. Why not? But this is some of the things that more, I guess, financial savvy people are thinking about. So start thinking about that way and going that direction. But anyways, I want to thank you guys so much for watching. If you have any type of feedback, information, whatever else, please put in the comment section below. Once again, even if your opinion is different from mine, that is okay. We can still be friends. I value people's opinions. I want to make sure that we grow this channel, we're transparent, and we share as much information as possible. But anyways, I want to thank you guys so much for watching. Make sure you smash the like button. Please subscribe. And once again, follow us on Instagram at Lucky Lopez, and we'll see you next video.